Don't be like Charlie. Charlie is that do-it-yourselfer who does himself in. Do-it-yourself is good for tile and grout. It is not good for asset protection. Charlie thought he'd save a few dollars forming his LLC online. With no guidance, he did it wrong. When he sold the property, he lost thousands and thousands of dollars. He did himself in by trying to do it himself. Don't burn yourself. Use Corporate Direct to set up and maintain your LLCs and corporations. Corporate Direct is owned and operated by attorney and rich dad advisor Garrett Sutton. Garrett wrote the bestsellers Loopholes of Real Estate and Start Your Own Corporation. He is Robert Kiyosaki's attorney for asset protection. He and his team will do it right. Visit them at corporatedirect.com or call 800-600-1760. Mention Rich Dad and receive $100 off your formation fee. That's corporatedirect.com. corporatedirect.com.
In a world of twisted facts, alternative narratives, corrupted corporations, and hacked feeds, how can we decipher the difference between truth and fiction? It's time to take back the truth. Read Robert Kiyosaki's Fake and learn the signs to recognize fake money, fake teachers, and fake assets. Determine what's real in a world where falsehoods are a weapon. Don't let fake advice destroy your financial future. Visit TheRealKiyosaki.com to read Fake by Robert Kiyosaki. That's TheRealKiyosaki.com.
This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello. This is Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And we have a program for you, especially for you, those of you who want to see what's going to happen in the near future. Of course, nobody can predict the future, but there are always signs along the way. So we have a very, very important show because, as you know, unless you've been living under a rock, there's a lot of stuff going on in the world. And, I don't know what's going to happen, but you better be prepared for whatever happens. So today we have one of our most popular guests. He's a fellow Hawaiian, Bert Dolman. He's a professional trader, investor, and analyst. He's a founder of Dolman Capital Research, has given his analysis and forecast to traders and investors for over 36 years. Now, the reason, growing up in Hawaii, people love Bert is because he'd call it as he sees it. Not that he's always right, but he wasn't willing to give you the bad news or the good news. Whereas a lot of times on Bubble Vision, like CNBC or some of the, the investment magazines, they got to be positive only. And I don't get that. You see, being negative can be the best thing ever happens to you if you're, if you knew the market was going to crash, oh, that's so negative. But if you knew it was going to crash, it could be the best thing ever happened to you because you could get back into it. And that's what Kim and I did in 2008, and it was the best thing that ever happened for us. So right now, we're just waiting for the next crash. So we don't know when it's going to come, but, just don't be so tunnel vision. It's got to be positive, it's got to be negative. You just want to see what you can see. Any comments, Kim?
Yes, I'm excited to talk to Bert. And, the great thing about Bert is he makes money when the markets go up, and he makes money when the markets go down, same as we do at Rich Dad.
Yep. Right now, for Kim and I, we're making, the good news is we're making a lot of money, not at Rich Dad, but because we're investors. We're making so much money because when it crashed in 2008, we started investing. And now we're exiting the market because we've made enough money. And it's toppy right now in real estate. So we're toppy. So it's not good or bad, right or wrong, but now we have a new problem called too much cash.
And that's a great point because if you only know how to make money when the markets go up, then you're going to be panicked when the markets come down.
Yeah, all you 401k and IRA guys, you should listen up to this thing because most IRA and 401k guys, who drank the Kool-Aid and invest for the long term in the stock market, you guys got your butt handed to you back in 2008. So just remember that about being positive or negative. You got to just be realistic. But anyway, welcome to the program, Bert.
Welcome, Bert.
Yes, it's beautiful to be with you again. It's been a long time.
It has been a long time. We have a lot of catching up to do.
Yes, this is an exciting time in the markets right now.
Yeah, so what is your crystal ball telling you?
Well, as you know, and I think your preface here, your introduction was very good. It's not about being right or being wrong. It's just you have to go by the weight of the evidence. And we realize that at any time, any of our forecasts, and we follow about 20 different markets, is likely to be wrong, at least one out of the 20, and probably more than that. So you go by the weight of the evidence, and it's like detective work. You see, okay, here are the positives, here are the negatives, and when a negatives far outnumber all the positives, then you know it's time to get cautious, and it's time to put on some short positions in the weakest areas. And we do that via technical analysis. We decide which are the weak areas. And then the rally that we had, many people have already forgotten that from the end of January to about the second week of February, there was a very big plunge in the world markets, including the U.S. stock market. So it has taken now 7 months for the market to make up that loss, and some of the indices have actually gone to new high by a small amount. So we analyze and see, okay, what propelled this comeback in the stock market? Is it genuine? Is it the continuation of a bull market or not? These are very important questions.
Right, so for those who are joining us, may not listen to Bert earlier, it wasn't that long ago Bert was very bearish on Apple. And right now, Apple's hitting new highs. But Bert warned us about Apple several months ago. And now, it's at new highs again. So this is why we listen to Bert, because you can make your decisions based upon what he sees. So,
and, you don't stick with your scenario. If I say I'm bearish at Apple, that means right now. But that can change next week. If the facts change and so on. And what Apple became, and here in February and March and so on, I was saying, this is Apple is the key stock to keep investors bullish while stocks are being distributed. Distribution in the stock market means that many of the big stocks, they go from the smart money, the informed money, to the naive money managers. They have to convince everyone that this is still a genuine bull market. The way to do it is you have a key stock like Apple and formerly Facebook until recently, etc. We call them the FANG stocks, which is Facebook, Apple, Amazon, Netflix, and Google. And these are the FANG stocks, and they have been propelled upward. We actually have 12 stocks in the S&P 500 index, which is 500 stocks, so 12 out of 500 accounted for almost all of the gains in the S&P 500 over the last 6 months. So it's a very narrow, manipulated move in the stock market.
So is
take
this...
a look at volume numbers. In this whole rally, volume has been declining as the indices went to higher levels. That is very, very bearish. It means that there are fewer and fewer people or money managers in this case. It's no longer the individual investor, but it's money managers willing to pay these prices for the stock.
And are you saying, Bert, that this is, for the last 7 months, what was propelling the surge of the stock market?
Yes. And it's mostly short covering. For example, Goldman Sachs...
When you say short covering, what do you mean by short covering?
Okay. There were a lot of short sellers during the decline into early February. Okay.
So they made money when the stock went down.
Yes, they were betting on the stock market to go down, and they were right until the market turned. So there were a lot of hedge funds that had big short positions, and Goldman Sachs released a number. They had a basket of 50 Russell 3000 stocks. The Russell 3000 is a very broad index, 3,000 stocks. So the top 50 stocks with a capitalization over $1 billion, they outperformed the S&P. They were the largest short interest. So they were the most heavily shorted stocks, these 50.
So that was
so
the heavily shorted stocks were the most negative on the stock.
Yes.
Yeah,
okay, so
that's what I mean.
when you're negative on a stock, you're short.
Right.
So so these stocks actually outperformed the S&P 500 during this rally that we had by 14 percentage points. They gained 21% in this rally of the last 6 months, versus the S&P about 7%.
So, ladies and gentlemen,
shows,
this is a very important point here. Is that I'm coming out with a new book called Fake, and one of the chapters in there is the words good and bad, right and wrong, really have no bearing in the markets. It has no bearing. You see, something can be good one day, bad the next, but bad can be good, and good can be bad. And that's why people who are very, very limited in their, not their trading range, but their mental range, oh, this is good, this is bad. Look, when something's really bad, it could be really good. Right, Bert?
Yes, but, people have to get away from this idea that the market prices are an indication of market forces.
Correct. Price.
That went out
listen
a
up.
long time ago.
Yeah, listen up. I just did another interview before coming on this one. They're asking about the price of gold, and I said, I don't follow the price of gold. And they go, but I thought you were an investor. I said, yeah, that's why I don't follow the price of gold. Could you explain that a little bit further? It's like, what's the price of Nike shoes right now? I don't know, but, Colin Kaepernick's endorsing them, But those are forces, not the price. Is that correct, Bert?
Well, what I was getting to is manipulation.
Okay.
Everything is manipulated now, and you're very smart in staying out of gold, because that is the most highly manipulated market right now, gold and silver. So I won't even touch it. You cannot use technical analysis at all.
Wait. See, this is very important. When somebody says it's being manipulated, all the things that Bert looks at go out the window, because there's something else in play right now, right? That somebody's got a gun to somebody's head.
Yeah, just go on a search engine. I prefer Bing over Google because Bing is not as political. So you just Google it. Class action lawsuits for gold and silver manipulation. You will come up with many, many articles where the big banks, this is Deutsche Bank in Europe, this is the big U.S. banks and so on, the big banks that trade bullion for their own account and so on. So many class action suits. They settle, they get fined $2 billion, not fined, but a settlement, billions of dollars every time. And people are not aware of this. These banks, they settle because they don't want it to go on their record that they have to report. So this is sheer manipulation. In the stock market right now, 70 to 80% of daily stock market volume is manipulation by the algo trading operations and the high-frequency trading. These are the computers, the ultra-fast computers. They can enter 90,000 trades, not shares, trades per second.
So your average day trader really has no shot, is what you're saying.
No,
how do they compete against manipulation?
No, he's the victim. He's the target. The day trader is the target for algo traders and for high-frequency trading. They love these day traders because it's easy money.
That's why they put food on the table, day trader food.
Yeah, exactly. And they love to promote day trading. Oh, this is the way to get rich.
Yeah. By the way, everybody listening up, is that for some reason on my website somebody says I now day trade penny stocks. Sports fans, I do not trade penny stocks. I create penny stocks. I'm an entrepreneur, but I don't day trade them. And so there's a very big difference between day trading stocks and creating stocks, right, Bert?
Yes,
very big difference.
I don't believe in day trading. Day trading, I've said that forever. Day trading is like trying to pick up dimes in front of a steamroller.
Hey, Bert, hold that one more second. Like I said, ladies and gentlemen, this Rich Dad radio program is with one of our favorite guests, Bert Doman. He calls it and he tells it like he sees it. So before we bring Bert back, coming up will be how Trump's trade wars. That's the thing I'm watching. What is President Trump doing? Because those are major market factors. How are his trade wars with China, EU, Canada, Mexico, and the rest of the world affect you? That's really more important than the price of Apple. We'll be right back.
You're listening to The Rich Dad Radio Show with Robert Kiyosaki.
Don't be like Charlie. Charlie is that do-it-yourselfer who does himself in. Do-it-yourself is good for tile and grout. It is not good for asset protection. Charlie thought he'd save a few dollars forming his LLC online. With no guidance, he did it wrong. When he sold the property, he lost thousands and thousands of dollars. He did himself in by trying to do it himself. Don't burn yourself. Use Corporate Direct to set up and maintain your LLCs and corporations. Corporate Direct is owned and operated by attorney and rich dad advisor Garrett Sutton. Garrett wrote the bestsellers Loopholes of Real Estate and Start Your Own Corporation. He is Robert Kiyosaki's attorney for asset protection. He and his team will do it right. Visit them at corporatedirect.com or call 800-600-1760. Mention Rich Dad and receive $100 off your formation fee. That's corporatedirect.com. corporatedirect.com.
Your financial education continues. Now back to Robert Kiyosaki and the Rich Dad Radio Show.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And you can listen to the Rich Dad Radio program anytime, anywhere on Rich Dad Radio, on iTunes or Android. And all of our programs are archived at RichDadRadio.com. The reason we archive it at Rich Dad Radio is because you can listen to this program again, because repetition is one of the best ways to learn. If you listen to this program again, you'll pick up twice as much as you do at the first pass. But more importantly, you can play this program with friends, family, and business associates and discuss. And you will learn things you missed while listening to this program. So once again, just go to RichDadRadio.com and download this program with one of our favorite guests, Mr. Bert Doman, fellow Hawaiian. But he's very respected for calling it as he sees it. He says things your financial planner or stockbroker will never tell you. So that's why you listen to Rich Dad Radio, because you know there's fake news. But over here we have a different point of view on the whole thing. It's all fake, so you may as well listen to us. So anyway, Kim, what do you want to say?
Oh, I just want to let people know that if they want to learn more about Bert and hear more of his comments, go to Doman, D-O-H-M-E-N, domancapital.com. And he also has a great newsletter called the Wellington Report.
I love that thing. A whole company reads it.
Our whole company goes through that.
And he's the author of Prelude to a Meltdown and the Coming China Crisis.
China.
So anyway,
talking about China.
Yeah. So Bert, when we talk about it, people are watching. The apple goes up $2, goes down $3. That's not it. The big issue today is the China crisis, and it was what President Trump is doing with these possible trade wars. The biggest one of all is between China. And just for those of you who may not be up on history, China was nothing when I was a kid. Absolutely nothing. They were a poor country. I crossed into China around 1976. It was dirt poor. And I do use the term dirt poor. And then, Mr. Clinton brought him into the WTO, the World Trade Organization. And suddenly Americans started losing their jobs. And the Clinton Foundation took off. And today we have unemployment. We have Rust Belts. I was watching this PBS show on Dayton, Ohio, how they used to be the boom. Dayton, when I was a kid, was the boom city of America. Now it's just in depression. But California is booming, Silicon Valley is booming, Wall Street booming, but the rest of America is dying. And now we have a president who says, make America great again. And I know a lot of people hate him, a lot of people love him, and that's not the point here. The question is, what is our president doing? So, Bert, what is your comment on the trade war, the possible trade wars, well, we're actually in it, between China, Europe, and the U.S.?
Well, I believe that President Trump is the first president to have the courage to say, hey, our trade agreements are totally unfair against the U.S. All the others were afraid to even propose that. And when you take a look, I lived in Europe some years ago, and I saw it. I mean, the discrimination against American cars was just incredible. They made it almost impossible for you to own a U.S. car because you had to make all of these expensive modifications, like a headline. Remember the flip-up headlines that we had? Oh, no, they're not allowed to flip up. They're always supposed to be done. Then you have to have a drain for the gas tank. All of these things, very different brakes. The brake that they subjected you to was actually designed to burn out the brakes of an American car. It was absolutely incredible, enough to get really, really angry. And he's trying to change it. The extreme left is now a bunch of radicals and lunatics, really. And the old Democratic Party of reasonable people, just a different viewpoint, is gone. Now it's just a bunch of lunatics. They want to destroy the U.S. president who was legally elected. That is not what we should be doing. No matter what party you're in,
so
you should be supporting the president.
Yeah, Bert, we're doing our best not to get politicals,
Yeah.
Donald Trump and his family are my friends. But the point here is this: we're never going to get any kind of resolution if we just keep arguing about who's right and who's wrong. So the question is, if there is a trade war with China and Europe and the rest of the world and in Canada, what do you think that will do? What's the repercussions? What will happen?
Well, the word "if" is such a big word. It's only 2 letters, but it's a very big word. If tomorrow the sky falls or the moon collapses onto the earth, what will happen? These are things that, I think it's a waste of time to even talk about. It's not going to happen.
So there's not going. So you're calling right now. There's no trade war with China, Mexico, Canada.
No, of course not.
Okay.
With China, it's going to be tougher because Xi Jinping is a very tough guy, and he doesn't want to have egg on his face. But in the end, just 5 minutes before 12, they're going to have an agreement.
Right.
Because both of them know it is in the best interest of both parties to have an agreement. China cannot live very well without a trade with the U.S.
Yeah,
this whole trade war discussion, is that media based, and you're saying Trump is going in here and he is shaking it up, and he is going to have new agreements, and that's going to be a great thing for America.
Yes, I think all of this is going to be great. But what we should not forget is the things that are going on around the world that have nothing to do with trade, and that is the extreme leverage that we have everywhere. All the derivatives, all the games that Wall Street played leading up to the 2008 crisis, it's there again.
So what you're saying is we learned nothing from 2008, Bert.
No, of course. Human beings never learn anything from experience. Really, we continue to make the same errors. Look at, since the Federal Reserve, 1913, the Federal Reserve was founded, was supposed to eliminate crashes and panics and recessions. Has it done that? No, we had a huge recession in 1921, even bigger one 1929, and the whole 1930s and so on. And from the 1987 crash to 2000 crash, 2007, etc. We continue to have them, and so that will never change. And right now, all the focus is on the terrorists, and all the focus in the left-wing media, I call it the propaganda media, is on basically the White House, what it's doing wrong, and so on. And nobody's focusing on the really big fundamental problems, and that is the economy. The economy may look strong compared to what we had the prior 8 years, but it is still very fragile, and it doesn't take much to set it off. And I have a feeling all of my indications are confirming what I've been saying the last 6 months. Watch out for September, okay, in the stock market. And there are very good indications that there's going to be a really tough time for the bullish stock market investors. And but again, it opens up new opportunities, as you said before. And you can be in cash now, and then be one of the few people that have cash to pick up the bargains with at the bottom.
And are you saying there's a crash, a big crash coming? What is your What are you seeing?
All the indications are that this whole rally of the last 6 months was phony. It consisted of short covering of stocks, massive short covering, and the hedge funds continued. They would cover their shorts, and there would be a little dip in the market. Then the market would rally again, and so on. They had to, again, cover their short. As I said before, the biggest gains this year have been in the stocks that had the biggest short positions.
So what's
the biggest amount of short selling?
So, Bert,
let me just finish this thought. And so now we have seen the whole rally here with virtually no investment buying. We cannot detect any investment buying. Buybacks have been the biggest factor in the stock market this year. It's going to hit $1 trillion this year. $1 trillion of buybacks of stocks. This is financial engineering. Okay?
Bert, hang on one second. Bert, hang on one second. Everybody listen to what this man is saying, because we started this program about how Bert said, watch out for Apple a while ago. It came all the way down. And he says the reason it's going back up is because the guys made money doing short selling as Apple came down. Now they're covering their short position, so the price of Apple goes up. It's not because real investors are buying Apple. Is that what you're saying, Bert?
Yeah, I'm not talking about Apple. I'm talking about the dozen of the largest capitalization stocks.
But I want to have people understand this idea of investing for the long term until the cows come back in. Yeah. You don't do that, do you?
Oh, that is financial suicide.
Good.
You always hear this from money managers. Say, we have the 5 to 10 year time horizon. That's how long they keep the stock.
So how long can they?
That doesn't make any sense.
And how long can they keep manipulating the stock so the market goes up and up and up?
Until the whole thing crashes. Then there's the rescue operation, as we saw after 2008. And taxpayers, again, will bail out everyone who is overexposed. It's the same game every time. The taxpayer then has to pay the bill for the guys on Wall Street that messed up. Now we have CLOs. I was starting to say that before. They're collateralized loan obligations. These are pools, just like the mortgage pools that we had into 2008 that then blew up and caused the crisis. Now we have CLOs, which are loans, not mortgages. These are student loans. These are credit card receivables. These are auto loans. And they put them into these pools and then sell participation certificates in these pools, and they're able to sell them because they have a higher interest rate than you can get on money market funds. Well, you can imagine the worst crap, the garbage, goes into these pools. Okay, this is the kind of stuff the banks keep the good stuff for themselves, the good loans. The garbage that they don't want, they put into these pools, and they're selling now about $150 billion this year of CLOs. So, and then we have the totally unsecured bonds being issued. With payment in kind. If the company elects you not to give the dividends or the interest in cash, they can elect to give it to you to buy more bonds that are garbage. So we're seeing the whole thing again, and nobody talks about this on financial TV.
Well, no, that's why we have you on Rich Dad Radio, Bert.
Yeah. This is the thing. It would totally destroy all of these bullish arguments. They always talk about earnings. Earnings at this point, at this stage in the stock market cycle, have absolutely nothing to do with stocks. Look at Alibaba came out. They reported 61% increase in sales. Well, I don't know if that's true, but they reported a 61% increase. The stock rallied for about an hour and then plunged. I think that closed down 7% that day. This is what happens. This is all sheer manipulation. Forget earnings. Forget all of the metrics that they tell you about on financial TV. The only thing that matters at this stage in the market is money flow. And this is what we is. Money flowing in and money flowing out. And the money flow figures right now are bearish.
So everybody listen to what this is. Bert Dohmen is a professional trader, investor, and analyst, founder of Dohmen Capital Research. And his website is Dohmen Capital, Dohmen Capital, TheRichDadChannel.com. And please go to his website and listen. This man has to say. We're not saying it's right or wrong because Rich Dad does not give financial advice or investment advice. But we want you to be aware that there's always three sides to a coin, heads, tails, and the edge. And right now you're standing on the edge because Bubble Vision or CNBC or all the financial channels are telling you that this is a great boom, and other people, and Bert is saying something else. Any comments, Kim?
Well, yeah. So, Bert, what does the average person do? They've got their 401k, they got their mutual funds. I got my mom who's sitting on a stock portfolio that was grandfathered to her, and she has no clue. So what is the average person, what should they be paying attention to today? What should they do?
The only thing that they should do is get continuous advice, not just an interview like this, not going to a conference and hearing somebody giving you a list of 5 stocks to buy and so on. That is all worthless. You know, what you have to do is get in touch with someone. Find someone who really has the experience and knows what he's doing. For example, I don't want to break my arm patting myself on the back, but in the 41 years of our business, we have called every significant stock market decline, and that has kept the subscribers on the right side of the market. And the ones that want to sell short, we even gave some recommendations on what to sell short. this is the only thing. You don't want to go by one specific time and say, oh, he said this and this, and therefore this advice is going to be good for the next 10 years. No, that's impossible. If that were possible, I would just write one book a year, and that would be it, you know? But you cannot do that.
So, Bert,
the markets are dynamic. They change.
Bert, I want to sell some Wellington letters for you. So how does somebody find out on a regular basis what you have to say? What is a subscription to Wellington letter?
Well, the Wellington letter is our oldest publication, and it's the website, domancapital.com. Just go to the website. All the information is there. You don't have to call us, and you can subscribe yourself.
How much is it?
It's $69 a month.
Well, that's very inexpensive for what you get.
Yes.
And once again, the Rich Dad
quite.
Company does not give financial or investment advice. Yeah. We just want people to be aware. He keeps it simple and understandable. Our whole company reads it. They love it. You know, it gets their eyes open, and they don't have to listen to me. So once again, it's Robert. Our guest today is Mr. Bert Doman, a friend from Hawaii for years and years and years. So, Bert, thank you for your time.
Thank you, Bert.
Yeah, it was nice talking with you.
It was fabulous.
Wish you all the best.
Fabulous.
Okay.
Fabulous.
Thank you,
All
Bert.
right. Okay, and I wish all of your valuable listeners, who, by the way, really love your show, because I've talked to some of them, they call us and so on, and they really love your show. So keep up the good work.
Well, thank you, Bert. Thanks
You
for being
too.
a contributor.
You too.
Okay, thank you.
Thank you. So when we come back, going to the next most popular part of our program is called Ask Robert.
You're listening to the Rich Dad Radio Show with Robert Kiyosaki.
Don't be like Charlie. Charlie is that do-it-yourselfer who does himself in. Do-it-yourself is good for tile and grout. It is not good for asset protection. Charlie thought he'd save a few dollars forming his LLC online. With no guidance, he did it wrong. When he sold the property, he lost thousands and thousands of dollars. He did himself in by trying to do it himself. Don't burn yourself. Use Corporate Direct to set up and maintain your LLCs and corporations. Corporate Direct is owned and operated by attorney and Rich Dad advisor Garrett Sutton. Garrett wrote the bestsellers Loopholes of Real Estate and Start Your Own Corporation. He is Robert Kiyosaki's attorney for asset protection. He and his team will do it right. Visit them at corporatedirect.com or call 800-600-1760. Mention Rich Dad and receive $100 off your formation fee. That's corporatedirect.com. corporatedirect.com.
Log on to richdadradio.com while you listen. Now back to Robert Kiyosaki.
I want to thank Bert Doman, one of my more favorite guests. His website is domancapital.com. And you can listen to this Rich Dad Radio broadcast anytime and anywhere on iTunes or Android. And all of our programs are archived at richdadradio.com, because repetition is how we learn, sports fans. So if you listen to this program again, and then you share with friends, family, and associates and discuss it, you'll be 10 times smarter than you are now. So repetition is like, how can you learn to play golf if you don't make mistakes and hit the golf ball 1,000 million times? So it's really ridiculous. I mean, I really despise what they teach at school. But repetition is how we learn. But you got to learn who the real teachers are. And I think Bert is a real teacher. I'm plugging my newest book coming out, called Fake. And we have fake teachers in school. Why would you listen to those guys? They're poor people, they're good people like my parents. But why would you listen to them? I just don't get it. Okay, if you want to be rich, listen to Rich Dad Radio and listen to people like Bert Doman, our advisors and all this. You want to be poor, just go to school. Any comments, Kim?
Yeah, well, it reminds me when we're talking with Bert about, what's going on here in the media and all of this, one of the non-obvious trends of a talk that you and I went to was about, number one, was manipulated outrage. And I'm seeing it everywhere. They're getting us all riled up. They're getting us all angry. And that's why I don't want to listen to the media anymore. I want to listen to people like Bert and read his Wellington letter and get real information, not all of this type. I think really when he talked about, trade wars, where the trade wars are all over the news, and where it's like, there's not going to be a trade war. We're going to have new agreements, Yeah. And he makes sense. So I just want to talk to people that make sense.
So So once again, you can submit your questions to Ask Robert at richdadradio.com. And so, Melissa, what's the first question we have today?
Our first question today comes from Jason in Denver. Favorite book, Rich Dad, Poor Dad. It says, Robert, I've been following your work since 2016. Since then, I've prepared for the financial future, acquiring assets and increasing my financial IQ. I'm curious as to what you think is happening in the economy today. I know you mentioned 2016 as the year of a major storm. I still believe it's coming as well. What do you think is delaying its arrival, and what do you think will happen when it comes?
Right. First of all, thank you for having an open mind. The reason I called 2016 is because one of the many crises facing the world today, not just America, but a big one is retirement. And as you know, the baby boomers are retiring today. Most of them in America don't have any money. So they're going to start pulling their money out. The reason the crash didn't come in 2016 was in 2008, I didn't foresee quantitative easing. I could not believe how much money the U.S. government printed, and they printed it all over the world. It's one of the biggest screw jobs we've ever had in the history of the world. So there was no crash in 2016, but instead we have this fake boom. And so now it's exactly what Bert's talking about. The boom is, the bloom is coming off the rose right now. We're starting to crash. So it's just a matter of time. So it was an 8-year boom from 2008, but I didn't see, nobody could have foreseen how much money these crooks are willing to print. It is, and how many billions in bonuses they're willing to pay each other. Comments, Kim?
Well, I think Bert said it really well when he talked about all the manipulation that's going on. And he even talked in the last 7 months, the stock market's been booming. But there's no investors that are buying these stocks. It's all manipulated by the companies themselves buying back their own stock and keeping the price up. So it's all manipulated. It's not a real indication of what's happening in the economy, because a lot of people are not, regular investors are not necessarily buying these stocks.
And look at this thing called, Bert talked about CLOs. They're the same as MBSs, mortgage-backed securities, the derivatives, or CDSs, collateralized debt obligations.
They just make it up, don't they? They just make up the stuff.
They make up these things, and they package this garbage, and they sell it to you because people are idiots eating at the trough. They're a bunch of pigs. You got to listen to other people. I'm not saying we're right or wrong, but you better listen to other people who are not feeding you that garbage. Next question, Melissa.
Our next question comes from Greg in Auckland, New Zealand. Favorite book, Rich Dad, Poor Dad. Says, Robert, what would be your biggest investing mistake in business, and what lessons did you learn from it?
The biggest mistake is people being afraid of making mistakes. I hear this every day. Oh, what's your biggest mistake? Well, the biggest mistake for most people is they haven't made any mistakes. They do as they're told. It's called go along. Do what mommy and daddy told you to do. Oh, don't make mistakes. You go to school, you listen to school teachers. Now, I get in a lot of trouble for this because school teachers are poor people. You can just look at the last New York Times magazine about how the school system is manipulated also. It's about money. But these poor school teachers, some of them have 2 and 3 jobs, and they're teaching your kids. And what they teach you also is don't make mistakes. Look, ladies and gentlemen, a kid cannot learn to walk if they don't fall down. You know what I mean? But they tell you, don't fall down, don't make mistakes. And I get these ridiculous questions from people who went to school. I think the biggest mistake is he went to school. And we talked about one of the last programs, why was Rich Dad so rich? He didn't go to school. If you understand that, he got taught by real teachers. If you can understand that, and you're sitting in there, oh, what if I make a mistake? And what you listen to, then, these financial planners and stockbrokers and real estate brokers, people who are agents of the Gestapo. These people work for the rich. They're agents. I have no problem with them, but you better know good stockbrokers, good real estate brokers, and good financial planners from idiots. Any comments, Kim?
Well, it's simple. You look at the most successful entrepreneurs, you look at the most successful business people. They're screw-ups, a lot of them. A lot of them are screw-ups. They've made a ton of mistakes.
Look at Bezos. He lost one of his first couple of companies before he started Amazon.
Look at Steve Jobs. I mean, all a mistake is, it just shows you something you don't know. And so you make the mistake and you go, oh, now I know. I mean, it's how we learn. So
and look at the CLOs, collateralized loan obligations, which is student loans and car loans and debt loans and all that. That's because they went to school. And there's no jobs, sports fans. There's no jobs. You'll never learn about money in school. Why would you have a student loan? That's really, really stupid, in my opinion. But I would rather listen to somebody like Rich Dad, who didn't go to school, but he learned from real teachers like the Rich Dad advisors, accountants, attorneys, bankers, real estate brokers, the real guys who are doing the real thing. I just don't understand it. So when somebody asks me, oh, what's the biggest mistake you made? My biggest mistake is I didn't make more of them. That's what I'm trying to tell you guys out there. You go to school, you're being taught by people who do not know what they're doing. They're called school teachers. That's why my book, Fake Money, Fake Teachers, and Fake Assets. All of you investing for the long term, saving money, investing in the stock market for the long term, you have a fake teacher there. So once again, thank you for your questions. I hope you woke up on that thing. And every time I get one of those silly questions, what's your biggest mistake? I didn't make enough of them. That's the biggest difference. So once again, you can submit your questions to AskRobert@RichDadRadio.com. Thanks again to Bert Doman, and thank you for listening to Rich Dad Radio.
This podcast is a part of the C-Suite Radio Network. For more top business podcasts, visit c-suiteradio.com.